you can make a bunch of money, right? But if you're not invested in something, in an asset, or ideally something that's an asset that's giving you cash back, you're gonna lose to inflation. Live the life that you wanna live and enjoy the time that you have left, right? So, ideally, I think the dream is for everyone to retire as soon as possible, right? What are you gonna do with that money, right? How are you gonna make the capital work? That's what it's really all about. Welcome to Capital Games, a podcast where we'll talk about financial fitness and investing. My name is Sam Arekasima.
You don't need to be 18 to buy your first home.
No, I'm your host. On this podcast, we'll cover a variety of different investing. Over the years, how many businesses have you been involved with, either creating, funding, or just really being involved?
People have the resources. They're just not resourceful.
Well, because I think when you're talking about even a millionaire, we're really talking about his mindset, right? And
How about if I'm lying? How about if I don't even have a dollar to my name?
you have an idea?
Woo!
And then the lender's gonna typically give you guidelines. They're like, we're only gonna give you this money if this property makes X amount of dollars. So when you're running your numbers and the bottom line is negative, the lender is not gonna give you a loan because Welcome to Capital Games. I'm your host, Sam Arekasima, Sam the Investor. Today's episode, we're gonna talk about financial literacy. I think it's really important when you're trying to do different things in the financial space and develop yourself that you have a good foundation. And I think financial literacy is the most important thing. And for this channel, I'm really trying to figure out how I wanna curate it and the content that I wanna put out and the information I wanna share and the audience that I really wanna help. And I think the audience or the show is going to basically go as I go and grow as I grow. So we'll probably just talk about the things that I'm working on or the things that, the level that I'm at the moment. And I think to do that, you need a really good foundation. And the foundation is really your financial literacy, because you need to have an understanding of how money works and how to first get it, right? How to keep it and then how to grow it. I think those are all important ways. And to do that, you need to understand financial literacy. So I wanted to kind of just go over financial literacy in general, starting from the top to bottom. I actually gave a course on financial literacy about a year or two ago. I definitely plan on doing it again. I thought it was good and I got some good feedback and some good insight. I don't know if I'm gonna do it physically in person like I did last time, if I'll do something virtually, but I think it's an important topic. And, on any level that you're at, whether you're, millionaire, billionaire, making $10,000 a year, $100,000 a year, you really just want to have your finances in order and understanding how finances work and what you can do to maximize your efficiency when it comes to earning money, keeping money, and growing money. So let's start from the top. I think the main thing, no matter how much money you make, is it starts with a budget, right? You wanna have a budget. I always say it's not necessarily how much you make, it's how much you keep. And when I say keep, I mean keep to be able to invest, right? There's people who make, $200,000 a year, but then they spend $195,000 a year. So they're only saving, $5,000 a year because they want to have a certain lifestyle and things like that. And if that's, where you're at, that's fine, but, and there's also people who are only making, 50 grand a year, but they're able to save, they're only spending 30 grand. So they're able to save 20 grand a year. So really depends on what your budget is and what your priority is and the lifestyle that you want to have and the things that you want to have as well and the expenses that you want to create for your life. Most people, they make 100K, they want, a nice house, nice car, take trips, vacations, and then at the end of all that, they don't really have much to save for, right? So it just really depends on what your goals are and what you're trying to do and where you are in your life. But, early on, budgeting, I think, is just the most important thing, and I don't think people really do it enough. Like every month, what I use is I have a spreadsheet, right? I estimate how much I'm gonna make. It was a lot easier when I was working a 9 to 5 because I knew exactly how much I would make every month. Because let's say I'm making $20 an hour, I'm working 40 hours a week. Now I get $500 or $1,000 a week, and then now I can really budget and understand. All right, I'm gonna be bringing in $4,000 a month. My expenses are $3,500 a month or $3,900 a month or $4,200 a month. And I know exactly if I keep on my budget, how much I'll have extra or how much I'll have short. So there's lots of different budgeting apps now that you can use and you can punch in how much you make, how much you're going to spend on your gas, your groceries, your rent, your utilities, your cable, your phone. Put it all on a spreadsheet and then look at your bottom line number. And then every month you should be Welcome to Capital Games. I am your host, Sam Kasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time. Able to get at least close to that number or right around it. And if you're not, you really got to analyze, your budget, and maybe you misbudgeted, right? Maybe you're going to spend $500 a month in groceries, but you actually spend $700 a month in groceries. But now when you redo your budget next month, you want to adjust for that so that way your budget is actually accurate, and that way you can plan accordingly, especially if you're trying to put aside a certain amount of money every month to, let's say, save up for a house or save up for a car or save up to invest in the stock market. You really just want to make sure that your budget is accurate, and that way you can really plan and adjust accordingly. And like I said, I use an Excel spreadsheet. It's pretty straightforward. I just put, all my expenses for the month, and I know, all right, this is the amount of money that I need to basically live every month. This is the minimum amount I need. If I make more, then I'll have extra. If I have less, then I'm going to have to, either dip into savings or figure out a way to cover up the deficit. So budgeting would be the first, step when it comes to financial fitness, financial literacy, financial education. And the way I look at finances and things is you want to have basically a financial tool belt, right? Different things for different finances. And I think after you get past budgeting and saving, let's say, you make $5,000 a month and your goal is to save $1,000 a month. Now, you're going to have in your budget all your expenses for $4,000, and that $1,000, that's what you're going to put aside to your savings. If you've got a 9-to-5 and you get paid every week, then you can just put down $250 every week in your savings to put that for your savings. And that way you can kind of really build up your budget. You could budget it and then build up your savings like that. And then the next thing I really want to talk about, which is, I think, super important when it comes to financial literacy, is credit. Credit is probably one of the most important things, and because that's the way our system here in the United States is set up. It's built heavily on credit. It's easier to get credit and borrow money than it is to actually make money, right? You may have to work 20 years to save up $500,000, right? But if you have good credit and you have decent income, a bank will give you a loan for $500,000 to buy a house, right? That's what credit does. That's what leverage does. And you want to make sure that your credit is at a space where you can get approved for these loans if you're trying to do different things, whether it's buying a house or buying a car or starting a business. All these things are going to require credit, because if you don't have the cash for yourself, then you're going to have to figure out a way to raise the cash. And you really want to make sure that your credit is in a place where when you're trying to do different things, that you can leverage it to your advantage, and it's not going to hold you back or slow you down. So credit is extremely important. And when we talk about credit, we talk about the credit score and your credit report. I think it's important to really understand how credit really works and how it gets broken down. Just so real quick, when you look at your credit score, it's made up of a few things, but your largest 35% is based on your payment history. 30% is based upon the amounts that you owe. The other 10% is your credit mix. 15% is your credit history, and then 10% would be new credit if you're applying for new credit cards, new loans, new lines of credit. And that's kind of how they break down your credit score. And then the one thing that I want people to really understand when it comes to your credit is late payments are the worst thing that you can have. You really want to try to avoid those at all costs, because you could have excellent credit, 800 credit score, and your credit score could be great for 5 years. You get one late payment on your credit, and it could drop it 100 points. So just make sure that, if you're using credit cards or mortgage or car payment, that you figure out a way to make the payment or work with the lender so that they're not reporting it to the credit bureaus, because that late payment is going to hurt you, not only in that immediate moment, but 2, 3, 4, 5 years later, that stays on your credit report, and that late payment can actually stop you later on down the road from getting a credit card or getting a car loan or getting your house. So you really want to make sure that you're on top of your credit and that you keep it as good as possible, and that way you can get approved for loans and you can really do the things that. Welcome to Capital Games. I am your host, Sam Kasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time. You're trying to do as far as your financial goals. And then if you do have bad credit, there are things that you can do, right? Like you can do secured credit card. If you don't, if you can't get approved for a regular credit card because your credit score is low, there are secured credit cards. There are credit cards that will give you a credit card with a lower credit score. So you really want to tap into all those different areas. You can hire somebody to help you work on your credit. I like to say you can do a lot of the work yourself, but if you do have some extra money that you don't mind paying to have a service help you with that, you can go that route as well. But a lot of the times, they're going to try to get things deleted and all that. But your best bet is to call up the person that you owe and see if you can negotiate that gets removed from your credit score or your credit report by making a full payment or something like that. Sometimes even when you settle a debt, it'll show as settled, but it still affects you on your credit report. So sometimes it's better off to just pay the amount in full, so that way they can see if they can delete it. If they can't delete it, then it's still going to be on your report, and then you just kind of have to wait till all the other items come up on your report and kind of really clear it out. But just having your credit report as pristine and as the best possible score that you can have. That way you're not stopped from doing some of your other financial goals. Because when you're talking about financial literacy and you have your goals, everyone typically has like a number that they're looking at to retire, or a number that they're looking to make a year to live a certain amount of life. So, when you retire, some people may only need, $50,000 a year to retire. Some people may need $100,000 or $200,000, depending on the type of lifestyle that they want to live and where they want to live, and, the things that they want to take care of or the people they want to take care of. So it's really important that, when you're looking at your whole financial timeline, as far as now versus when you're retiring, that you're on track and you're on pace to meet all those milestones. So that's credits. So we just talked about credit, debt management. Now, the next thing I want to talk about is investing. Investing to me is really the only way that you could really get ahead, right? You can make a bunch of money, right? But if you're not invested in something, in an asset, or ideally something that's an asset that's giving you cash back, you're going to lose to inflation, right? If you have your money sitting in a savings account, they're typically giving you right now, I think even maybe 3 or 4%. Inflation for the past, let's say 3 or 4 years, has been closer to like 8 or 9%. So by just keeping your money in a savings account, you're actually losing against inflation, right? What you can do to help offset that is invest in assets, real estate, invest in the stock market. And the reason why you invest in those things is because they'll typically beat inflation, or at least match inflation. Stock market averages around between 7 to 10% on average per year. And that's basically right on par with what inflation is. So if you keep your money in the stock market, you'll typically beat inflation and you'll actually get a little bit ahead versus if you just kept your money in a savings account. Now, business is the number one thing I think that you can invest in. If there's a business that you can invest in where you can get you put in 10,000 but you can get 20,000 back, that's 100% return. You're beating the stock market, you're beating inflation. Now, typically these are a little bit more risky, which is why you're getting a higher return. But that's why being a business owner is important, because you have the opportunity to increase your earning power much more than you do when you're at a 9 to 5 or even investing in the stock or even real estate. Typically when you buy real estate, you're looking at typically 5 to 10% return on your investment as well. Certain deals, depending on how intensive you want to get, if you're doing like a fix and flip or things like that, you can get higher ROIs, maybe 30, 40, 50% cash on cash returns. But you're doing a lot more work. It's very intensive. Some people say that real estate is passive. I don't believe it's completely passive. There's usually some type of management or some type of work that you have to do, whether it's managing your property manager, or if you're your own property manager, that's now time that you are taking out of your day to do that work. Welcome to Capital Games. I am your host, Sam Arekasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time. But you're going to get a higher return and more of a return on that. So I think investing is really important. When you're doing your budgeting, you should be having an amount that you're investing. Right, I think a good amount to invest of every paycheck or your income would be like 15%. Right, you want to prioritize the investing more than anything else that you're doing. You actually want to invest before you pay your bills, if that makes sense. I know it sounds counterintuitive, but you really want to make sure that you are putting money aside for your future, and that your dollars, that your active income that you're earning is turning into passive income, and that you're multiplying your dollars. Right, you want to take that dollar and turn it into two. And it typically will take time for that to happen. But if you're consistently investing and, putting it into whatever stocks, or if you have real estate, or whatever vehicle that you choose to try to multiply your income, that is the best way. So whenever you get paid, whenever you make some money, you want to try to figure out a way to invest it. And the more that you can invest, the better off you are. If you can cut your expenses and increase your investment, the better off you're going to be. And you can invest directly, like yourself, or you can use a 401k to invest. You can invest with an IRA. These are all the different things that you can do as far as investing. You can do life insurance policies as an investment. There's just a ton of different ways that you can invest your money. And I'll list of a few. You have your savings accounts, you have stocks, you have ETFs, you have index funds, bonds, U.S. treasuries, REITs, which are real estate investment trust, annuities, life insurance, digital assets, cryptocurrencies, and then businesses. Those are all the different things that you can invest in. And that's where you really want to put your money, because the more that you can invest now will mean the less that you'll have to invest later. An asset a day keeps the 9 to 5 away, right? So if you're putting your money into assets and it's growing, that's going to be able to increase your income down the road. So I think it's really important to invest, and you got to figure out how you really want to invest and how aggressively that you want to invest. And the more aggressive that you can be now, the more your older self is really going to appreciate it, because when you're investing, it's typically a slow road, right? You're not going to get rich overnight from investing, but the thing about investing is you're going to be able to use the compounding, right? Compounding interest. The compounding interest is the eighth wonder of the world. That's what Albert Einstein said. So you want to figure out ways to use compounding interest to your advantage. And the longer that you can invest in an asset and the longer it can compound, the faster it starts to grow. So if you can start investing at a younger age, you can invest the same amount of money that an older person would, and it can far outpace what that other person does, because there's now more time that money has to work with the compounding. So that's really why you want to invest, so you can get the compound interest and really make that money grow. And then over the time, 10, 20, 30, 40 years, you'll really start to see that money grow over a longer period of time. So, we talked about investing. The next thing you want to talk about when we talk about financial literacy is retirement planning, right? Social Security. I don't know if you guys really understand what's going on with Social Security right now. I know, most people, by the time they retire, Social Security probably won't be there. So if you're relying on Social Security to help you with your retirement, I think you should definitely rethink that strategy. There's not enough money in Social Security to last for the next 30, 40 years. I think they said there's about probably 10 to 15 years left. And the real issue that we're having is our population is declining. And the way that Social Security works is that younger people put into the pool to pay for the older people. But if there's less younger people, as our population declines, and the older people are living longer, that means that there's more payouts that they're going to have to do. So there's not going to be enough money from what they originally intended, right? So what they're probably going to have to do is, I think the retirement age right now is 65. They're going to end up increasing your retirement age, right? So You can retire at 65 right now and start getting Social Security. Once they start running out of money, they're going to say, oh, you know what? We're going to have to bump that up to 72. Now you can't retire till you're 72. Welcome to Capital Games. I'm your host, Sam Arekasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time to get Social Security. And eventually, if there's even less money, they're going to say, oh, you know what? We're going to have to change that to 77. And now you won't get Social Security until you're 77. And some people, they're waiting until they get to that age to retire. But guess what? You retire at 77. How much more time do you think you're going to have to really enjoy life, right? So you want to figure out a way to get to a place where you can retire when you're ready, right? You're not going to wait for Social Security. You want to have your number that you know that, all right, I need to get to $5 million, right? Saved up, or 10 million or 2 million, whatever that number is, to now live off of the next 20 or 30 years of my retirement. And then you really want to try to figure out a way just to make that grow. So retirement planning, I think, is crucial in understanding what your goals are, so that way you don't have to rely on the government for Social Security. You don't have to rely on your kids trying to take care of you. You can really decide how you want to live your life in your retirement age. And there's different things that you can invest in for your retirement account, right? You have 401ks. I definitely highly recommend that, especially if your employer is going to match. Government jobs, they used to give out pensions. Nowadays, a lot of jobs, they're not giving out pensions anymore. Pensions are just an additional form of income that you get when you're retired from your employer. You know, the post office used to have it. Police officers, I believe they have it. And these are nice tools to add to what you're going to do. You don't want to rely on just one of these things. You want to have multiple sources of income. You know, like for me, my plan for retirement is I'm going to have real estate, right? I do real estate, and I plan to keep some of those real estate properties that, you know, when I'm retired, they'll be paid off. So I'm not going to have to pay a mortgage. So now instead of paying a mortgage with the rental income, I can use that rental income as income to help me, you know, pay for what my day-to-day, right? If you have your 401k, you can use that. If you have annuities, you can use that. If you have a life insurance policy that you put, you know, a bunch of cash money, you built cash value with over time, now you can take money out of that life insurance policy and then use that. So there's so many different investment vehicles and things that you can do to try to figure out how you want to retire. And I think it's important that you start thinking about it at a young age, because again, the more money you put in at a younger age, the less you'll have to put in as you get older. Even if you know, let's say you're 30 or 40 and you don't have any retirement, it's still best to start now. And the more that you can put in now, the faster the compounding of the interest can really take place. So it's never too late to start investing and start trying to figure out how you're going to retire, because, you know, the last thing you want to do is, you know, you're at an older age and you still have to figure out how you're going to get income. You can't retire because now you still have bills that you're going to pay. You got to figure out how you're going to get a job. And now you're older, so it's harder for you to get out of bed. You're probably going to have health concerns and health issues, and you just really want to make sure that you're setting up yourself now, so that way when you're older and life is probably going to be physically harder on you, that at least financially it should be easier, and you can live the life that you want to live and enjoy the time that you have left, right? So, you know, ideally, you know, I think the dream is for everyone to retire as soon as possible, right? And whatever that may look like, you know, if you want to retire when you're 40 or 30, depending on how you've, you know, gathered income and how you've saved, some people can retire at an early age, right? They've built businesses and they've sold those businesses, and now they use that cash as their retirement. And now they can kind of pick and choose what they want to do with the rest of their lives and how they're going to impact the world. So again, like, I think just, you know, figuring out how you're going to retire, whether it's, you know, saving up with your 401k or buying real estate or investing in stocks or having a business that you're looking to sell or a business that you're going to own. And then now that business is going to be paying you in your retirement. There's so many different ways, but definitely pick a strategy that you think is going to work well for you and things like that. So The next topic I want to cover is taxes. When you're doing your financial budget and you're doing financial literacy, you really want to look at. Welcome to Capital Games. I am your host, Sam Arekasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time. How taxes are going to impact you. And the more money you make, the more taxes that you could pay. But you're really going to see as you gain more wealth, the government incentivizes the wealthier people to do different things as when it comes to taxes. You'll see, President Trump, he brags about not having to pay taxes because he understands the tax codes and the loopholes that are in it, so that way he could pay less taxes. And you really want to figure out how taxes really can affect you and what you can do to lower your tax burden, right? Real estate, that's why the wealthy people love real estate. There's great tax advantages for owning real estate. There's depreciation, right? There is, what's it called? When you 1031 exchange, when you sell a property, you're typically supposed to pay capital gains taxes on that. But if you buy another property that is similar with those gains, now you don't pay taxes on it, which is why a lot of people will sell a real estate asset and then buy another real estate asset because they're taking advantage of the tax code, that 1031 exchange. And now let's say they were up $500,000 on a property they bought 10, 20 years ago. Instead of paying, let's say, the 40 or 50% tax on that and paying $250 to the government, they'll say, all right, I'm going to use this for a down payment on another building. And now they avoid that $250,000 tax payment that's supposed to go to the government, and they put it in an asset that's now going to start producing income from them as well. So you really want to understand taxes, and when you're even doing your annual taxes, you want to have a good financial tax preparer or a CPA that you want to work with, so that way you can kind of formulate a plan on what you want to do for that year. I sit down with my tax preparer every year before the tax year is even over, so we can start preparing for the following year. Because you really want to have your goals figured out. Like, I buy a lot of real estate, so I need to make sure that I'm showing enough income on paper to get approved for certain loans and things like that. So I want to make sure that if I know I want to buy a property, that I have enough income that's showing to the government. That way I can get it approved for a loan, because when you're a small business owner, typically you want to try to pay as less in taxes as you can. But when you do that, you're typically expensing a lot of things, right? You're taking a lot of things off. So when your bottom line, you're going to have a less income that you're showing, and that's the taxes that you're going to pay on. But now when you're going to try to get approved for a loan, they're going to tell you, well, yeah, you made $300,000 in gross, but you're only showing $50,000 on your income. We can't approve you for that house. We can't approve you for that business loan. And so you really want to strategize with your tax preparer, strategize and let them know what your plans are, so that way they can make your taxes align with what you're trying to do. And if you do need a good tax advisor, I have two people that I would absolutely recommend. Liberty Tax in Clifton, Marianne Bowman, she's been doing my taxes for 8 years, and also Coombs CPA, Andrew Coombs, based out of Newark. He's an excellent CPA. If you're looking for business planning, tax planning, I would definitely recommend that you go talk to those people and really tell them your vision, tell them your goals, so they can make it align with what you're trying to do and create a tax plan that works, so that way they can make that preparation. The next topic I want to cover is estate planning, right? Estate planning is just planning for what's going to happen in the event that you're no longer here, right? You want to have everything already set up. You don't want to have to leave that to your family to try to figure out. You don't want to have them, you have debts and burdens, and you putting it on them, and nobody knows where X, Y, and Z is. They don't know what assets you own, and now there's infighting with the family because you didn't tell this person that they were supposed to get this property or this piece of jewelry. You want to have a will. You want to have a life insurance plan. You want to have a trust account. You want to have everything all lined up, so that way there's no confusion, there's no issues, and that way your family can just grieve and that's it. They don't have to worry about all the other stuff that comes along with it. You don't have to worry about, oh, they didn't have life insurance and now they can't even afford to bury you, right? And now they're trying to figure out how they're gonna bury you. They have to set up GoFundMes to ask people to donate so that now they can have your funeral. Like, welcome to Capital Games. I am your host, Sam Arekasima. In this podcast, we will cover financial education, financial entertainment. We'll cover a variety of topics. This will be a community where people can give feedback, learn information, and if this is the type of content you like, subscribe, share, and tune in, and we'll catch you next time. Those are not the situations that you want to put your family and your loved ones in. You want to try to figure out a way that you can address all those issues while you're still here, and that way it's just a easy process and it's just something that you just really want to take care of. And it's much easier when everything is kind of written out and planned out and you're telling people, all right, this is your job, this is your job, this is your job, and everything kind of gets handled like that. So estate planning is really important. Life insurance is really important. You don't have life insurance, the younger you get it, the cheaper it is. You know, again, and there's different benefits of life insurance as well. I won't get into it too much, but you know, you have whole life, you have term life, you have index universal life. Speak with a licensed agent. They can kind of go over all your options, tell them what you're trying to do. They'll formulate something that works for you, and then you can really use it as a tool as well, where if you wanted to borrow against the policy to invest in real estate, or you want to try to do the infinite banking strategy, you can do all those different things with life insurance. And again, this is kind of one of the last topics, but you're doing all this to create some type of financial independence, right? You want to create your budget. You're gonna figure out, you know, your credit. You're gonna have your assets, your stocks, your estate planning. You want to be financially free, right? Whatever that may look like different things for different people, but you know, you want to be in a place where financially you can meet all your needs and you don't have to depend on an employer, a spouse, or anyone, where you're good financially. I think that's what everybody wants. They want financial independence where, you know, if they don't work the next day or ever again, they're still covered financially and they can pay all their bills and they can live the lifestyle that they want to lead and all those things. So financial literacy is extremely important. Focus on it, learn it, understand it, and then put yourself in the best position that you can so that way you can be financially independent and financially free at some point. With that being said, you know, if you ever need anything as far as on the real estate side, or you have questions about investing in real estate, you can reach out to me on Sam the Investor, Sam the Realtor. Watch this podcast, Capital Games. I'm always trying to give out as much information as possible. I'm trying to serve as many people as possible. So if there's anything that I can do to help you on your journey to financial independence, please reach out. I'll be happy to help. We'll catch you next time.